Hi there, my name's Tiffany Krause from Remax Success in Toowoomba. There's been a lot of media attention recently in regards to negative gearing, so I thought I'd give a bit of a breakdown and make things a little bit simpler to understand. Now, the Real Estate Institute of Queensland, so the REIQ, have been very proactive in lobbying the government for this tax relief to continue. About 1/3 of our population actually reside in a rental property. So unlike many other nations, our federal and state governments provide very limited housing, which is predominantly for those who are the most disadvantaged. Now, the majority of our rental homes on the market are actually provided by the private sector. So that means that individual private investors who are attracted to purchasing these rental homes with the potential of capital growth, both mid to long term, as well as the tax break incentives. Now, to do this, investors generally need to commit to a substantial bank loan. So the holding and running costs of an investment property include council rates, general maintenance, insurance, and of course the interest that's payable on that bank loan also. So most times in the initial years, these costs and expenses are far greater than the net rental income that they do receive. So the investor is actually then required to dip into their own back pocket and top up that additional loss from their income. Now, in the early years of an investment, this can actually bring about a fair bit of financial pain for investors. So negative gearing is simply the government's way of allowing an investor to reduce their tax bill by compensating them for the higher costs compared to the lower income that they do receive. So over time, the investor pays down the debt whilst the rent usually rises, which is great. But once the income from the rental property then exceeds the holding costs, the investor makes a profit, but then they pay tax on that. So there are some disincentives on property investment, like extra stamp duty on the purchase price, and also land tax once their property portfolio reaches over a certain value. And now these taxes are actually collected by the state government. So what we're highlighting is that the tax deductions and investments, rules and so forth can be very confusing. Now, it is obvious we need to continue attracting investors to the property market, otherwise rents will rise steeply, purely based on supply and demand. If we have less properties available, the rents are going to be much higher, which is going to cause a lot of problems for people out there in the market that are still renting. Now, if negative gearing was axed, governments would then be required to fund extra housing, which would then in turn mean that we would have to pay higher taxes. So it is really important to keep negative gearing, as it does keep roofs over people's heads. Now, if you've got any questions or queries whatsoever, please always feel free to give me a call. My name's Tiffany Krause from Remax Success. Thank you.